Hey, welcome investors to the 40 Finance channel. Today I'm going to throw out a wild concept for discussion and debate, and that is the thought of selling Microsoft stock where it stands today and purchasing Facebook stock instead for the next 2 to 3 years. And the concept here is pretty simple, and I think it's a fun one to debate, right? You've got Microsoft that, for all intents and purposes, over the past 2 or 3 years, like this stock can do nothing wrong. It's probably far and away the most recommended stock in terms of returns, stability, and safety. And then on the flip side, you have Facebook, which on the surface is an unbelievable deal from a valuation perspective, but things just don't seem to go right for very long in Facebook land. And while the headwinds do seem to pile up on Facebook, fact of the matter is, this is not a company that's going to go out of business, and this is a company that, in my opinion, has a lot of optionality to it if things ever do go right. So for this video, I'm going to debate the merits of selling out of Microsoft stock and buying into Facebook stock with the aim of maximizing returns over the next 2 to 3 years. All right, so first up, we got Microsoft stock. This is a one-year chart. You can see that it is up 22%, which is actually pretty good when you think about how much of the market has melted down here recently. And Microsoft's taken their hits, but for the most part, I would say, their earnings reports have been absolutely stellar over the past several quarters. All right, projecting ahead on Microsoft as far as EPS estimates, you can see the calendar year, or their fiscal year rather, ends on June of 2022. So somewhere in the neighborhood of August, maybe late July, they'll report on the end of this fiscal year. You got 18% EPS growth, 943. That still has a chance to come up. This is an analyst consensus, and I wouldn't be surprised if it does come up. Looking ahead to the next fiscal year, which sounds far away, but it actually starts on July 1st. They're talking about 1075 right now, which would be an additional 14% boost to the EPS. And then depending on how much you want to believe in the out years, you got plus 16% in 2024. And that's where I'm going to stop because the number of analysts after 2024 drops dramatically, so you don't really get a good consensus there. All right, how about on the revenue side? This fiscal year coming in just shy of $200 billion. That's still 18% growth, and that's certainly better than you'll get with Apple. Price to sales over 10x, so arguably a little high, but again, this calendar is going to flip over very, very soon. $226 billion into next fiscal year. That's growth of just shy of 15%. And once again, these numbers can go up over time, and in a company with momentum like Microsoft, they do tend to go up over time. All right, now a quick overview of Facebook. Again, one-year chart. Ironically, they're the direct opposite of Microsoft's performance. They're minus 22%. Microsoft was up 22%. All right, now let's see how analysts are projecting Facebook's growth. By the way, if you're curious, this is the SeekingAlpha platform that I feature on my channel quite a bit. If you're interested in learning more and saving a decent chunk of money on an annual subscription, my affiliate link is in the description of this video. Just click on that discount link below and you get a great discount on your subscription, and you also help support my channel as well. All right, so Facebook, December 2022, they just reported, right? We know that it was a little bit of a dumpster fire in the way that analysts reacted to it. So their fiscal period is still looking forward all the way through December. You got an EPS estimate of $12.48. Interesting to note, that is minus 9.39%. So EPS going backwards year over year, that's typically not a good sign. However, we do know that Facebook is investing in their company, which we'll talk about in a little bit. Very similar to what you see with Amazon right now. All right, as far as 2023 fiscal year, projection of 1483, similar to Microsoft. These tend to go up over time. They come out conservative in the beginning of the year, and they usually keep adding as more data is available, that would be a growth of 20% or so, but you'll have to wait till next year to see it. All right, how about on revenue? This year, 132 some odd billion, that would still be growth of 12%. So the EPS is taking a step back due to capital investment, but we do see that the revenue is projected to grow double digits. Also, 2023, we have another double-digit projection at 156 billion. So I would say with these projections, it's almost contrary to popular belief that Facebook is done growing, right? And it's going backwards. And that's not really the case here. I think what it boils down to is not everybody being sold on what direction Facebook wants to go. Now we look over at forward price to sales. We remember Microsoft was in the 10 range, and Facebook is dramatically less than that. I didn't even look up here. So forward PE of 16 and then forward PE of 13, if they hit their numbers the next 2 years, that is also dramatically lower than what we saw with Microsoft. So from a valuation perspective, if you didn't know anything about the business, these two have very comparable growth plans, but one stock is remarkably cheaper on the valuation side, and that is Meta/Facebook. All right, digging a little deeper into the Microsoft side, this is their revenue segments that were reported in their last earnings report. Productivity and business processes, this is basically their Office software, and LinkedIn's thrown in there as well. And great growth. I mean, you wouldn't figure that Office, quite honestly, would grow that much, but it is continuing to churn out good profits. And LinkedIn's done surprisingly well. So that segment was up 19% year over year in the quarter. Intelligent Cloud, which is obviously Azure, up 26% year over year. And if you don't study Microsoft stock very much, it's really been the Azure/Intelligent Cloud category that has lifted this entire company since roughly 2018 or so. That's about when the cloud conversation at the enterprise level started becoming very, very real. The last category here, more personal computing. This includes things like Xbox, the Surface tablets. It's really kind of a mishmash of different categories. And even that's up 15% year over year. It is important to call out, if you're curious about Xbox, where does it stand in the company? It's performing well, but it's a relatively small slice of the business, certainly when you stack it up against Azure, which has been the game changer. All right, now in the Facebook earnings report, one of the big things that stood out for a lot of people was the fact that Facebook daily active users actually regressed very slightly in this past quarter. And that regression was tied to USA and Canada and other smaller countries that don't get their own segment. But in Asia Pacific, you were up very slightly, and in Europe, you were up very slightly too. But again, this is Facebook standalone. That's just that app. As far as the entire family of apps, if I can scroll up here, so in terms of all the apps, which they call their app family, you actually had small growth in Q4 of 2021. So you see the 2.82 billion versus 2.81 billion in Q3. Again, not a huge lift, certainly not as big as we've seen in prior quarters, but we have to keep in mind that Facebook has several different apps at play here. Now, the other negative headwind that was focused on with Facebook was concern around their advertising revenue. The iOS update, and Google's got one coming of their own right, and Facebook went on publicly to say it's been about a $10 billion headwind. What's interesting, though, is it really doesn't show up in the revenue growth by geography. So if we go down to USA and Canada, which, oh, by the way, have the highest prominence of iOS operating systems, then you still had significant growth, not only year over year, but you also had growth from quarter over quarter. And when you stack all the geographies together, they're doing just fine in this Q4. When you compare it back to Q4 of last year, it's roughly a $5 billion increase year over year. All right, so Microsoft has Azure as their big growth driver. And to be fair, the cloud has a lot of components to it, little add-on and bolt-on type services, not to mention that over the long haul, most of your clients use more of the cloud as opposed to using less of it. But the one thing that is interesting about Azure when you compare it to AWS, they're not even the market leader from a global standpoint. In fact, if you go back for the past 5 years or so, it's interesting because both AWS and Azure have held pretty consistent with their market share across these years. So while the cloud has been an awesome growth driver for both Amazon and Microsoft, it's kind of interesting that from a market share perspective, things really haven't changed that much. And the one thing that's potentially concerning for all these cloud companies in the next, let's just say 3 to 5 years, is the fact that the big dog enterprise clients, right, the huge contracts that can really move the needle, those are going to start to dry up because these companies are already going to be integrated in a service. And we know that switching costs can be ridiculous, particularly on the corporate IT side. So it's kind of like it's a land grab right now. And I would say that the end of the large client base is probably already here. But you're going to get to the point where you're dealing now with medium and small businesses that have cloud needs. And quite honestly, those contracts are just not as lucrative. Now, on Facebook's side, they get a lot of sarcasm for investing in what they call the metaverse, which is basically digital reality, right? Except even farther beyond just your computer screen. And in defense of that, the metaverse can be a lot of things to a lot of different people. And as much as investors, we want it to just equal one thing, like cloud software, it's not that. It's a lot of different things. And to be fair to Mark Zuckerberg, no matter what individual investors think about the metaverse and whether or not it's a good spend of money, you have to assume that this guy is smart enough, and he certainly has much smarter people working for him than any of us. You have to assume that there's something there. After all, his Facebook platform was one that basically changed the entire realm of social media. And while I'm not the metaverse expert by any stretch of the imagination, I will say what I think has been the most impressive, if we look at this PC Magazine article, the Oculus Quest, which they're on the second version now, you can go through 100 articles just like this. The Oculus Quest 2 is far and away the #1 VR headset right now, and it's not even close. Now, PlayStation might be onto something, depending on what kind of support they offer for PlayStation 5, but they're not really in that arena yet on the PlayStation 5 level. So as far as I'm concerned, from just looking at the stats, the Oculus is king. Granted, it is a small market right now, but as an investor, if you're asking yourself, what is Facebook going to do now that their advertising revenue is drying up, right? Well, first of all, the advertising revenue is not drying up, as we just saw. And second of all, maybe there is something to this Oculus in this virtual reality world that seems to be catching on, at least with younger generations. So my opinion right now, looking at valuation metrics, Facebook is a much better deal, absolutely for sure. But we know why that is, right? Facebook has a lot of downward pressure on the momentum side, whereas quite honestly, Microsoft hasn't made a single mistake in what feels like 2 to 3 years now. But for this video, we're thinking about today. What would be the advantages of selling out of Microsoft and buying Facebook today? And my take is Facebook has a lot more optionality right now than Microsoft does. Microsoft does not have an ace up its sleeve We know what Azure means to the business. It makes a heck of a lot of sense for them to focus on Azure and continue to build out, hopefully, market share, but add on services to that as well. Now, if Microsoft has any tricks up their sleeve, it's going to be in the Xbox/PC video gaming world, and we'll probably learn more about that when their recent acquisition takes hold. Now, on the Facebook side, I think you have several current headwinds that could easily turn into tailwinds. The first one I would say is advertising. It's getting a bad rap right now. $10 billion in losses due to the iOS tracking blocking. But let's face it, the advertising revenue is still growing. And from a tracking perspective, this entire ad tech market is going to come up with a solution. But I simply cannot picture a world where advertisers walk away because they can't track people on Apple phones. Next on optionality for Facebook is obviously Meta, right? The metaverse, Oculus, VR, NFTs, whatever you want to call it. Facebook is knee-deep in that world, and they've come with deep pockets. I can certainly understand while some investors are biting their nails over this, but I think at some point you have to trust in Zuckerberg and his team, who, oh, by the way, have done some pretty successful things in the past. Now, another segment of optionality for Facebook that I don't think a lot of people think about, at least when you compare it to Microsoft, is Facebook is in the mobile phone, right? More likely than not, you have one of their apps on your mobile phone. Mobile phone is a world that Microsoft has essentially bowed out of. And yet we know how much more important phones are becoming in our lives. Everything from fintech to security, it's all in the palm of your hand, and Microsoft has zero place in the mobile phone space. So bottom line for me right now, I can see a pretty strong argument for buying Facebook over Microsoft. And if I was sitting on Microsoft stock that had already made me some handsome returns, I would think about, at this juncture, potentially selling at the high for Microsoft and getting in low on Facebook for the next 3 to 5 years. So if you're looking at both of these companies from the prospect of valuation, hands down, Facebook's winning just on a number score perspective. Now, from a growth perspective, percentage-wise, they're pretty much riding neck and neck. And there's certainly something to be said for how stable Microsoft's revenue looks for the next couple years. But the third factor, optionality, is where I think Facebook could actually come out a leg above Microsoft. Now, there's no denying that there is way more risk in that statement to sell Microsoft, which is performing well. You know, selling a winner to buy a loser is not a strategy you're going to read about in many stock market books. So just to be clear, this is just my opinion looking at both of them. And to be honest with you, I buy the QQQ instead of any individual FANG names. So from my seat, I do not own Microsoft individual shares or Facebook individual shares. I believe that the FANG world is going to be changing, and what we think is going to happen is probably going to end up a little differently, but technology will prevail. So I buy the QQQ and let the world sort itself out. All right, guys, let me know, would you ever sell Microsoft to buy Facebook in this current environment of 2022? Be anxious to read your comments as always. Don't forget to check out that special offer for Seeking Alpha down in the description. Save yourself some money, support the channel. And as always, please give the video a like, share with your friends. Really appreciate all your support. We'll see you on the next video.